pretty sharp words there. And a divided Federal Reserve cut interest rates by a quarter point for the third time in a row today, bringing the key rate down to about 3.6%. Now, most voted for the cut. President Trump's pick, Stephen Barron, wanted a half-point cut, a larger cut. Two members, though, wanted to keep the rates totally unchanged. Fed Chair Jerome Powell signaling it may pause future cuts here, and that could set up a potential clash with President Trump, who wants steep rate reductions. Fed officials project just one more rate cut next year as inflation remains above the central bank's 2% target. And Scripps News national correspondent Mitch McCann is watching how investors are reacting to this afternoon's decision. Been kind of a wild ride. Get us up to speed, Mitch.
It certainly has. Good afternoon from New York. Investors, to be frank, were positive about this rate cut this afternoon, and that is despite suggestions that investors had already priced in a rate cut. I think earlier today the probability of that happening was around 86%, but we saw some movement in the markets this afternoon after that decision was made. The Dow Jones Industrial Average finished up 1.05%. The S&P 500 was up 0.67%, and the Nasdaq was up as well. The Nasdaq rather was up 0.33% at the close on Wednesday. Now, in its decision, as you mentioned, the Fed cut rates to a new range of 3.5% to 3.75%, and it represents the third cut in a row. But in its statement, it did not commit to further cuts in the coming months. And as a set of predictions, the Fed signaled that they may only lower rates once next year. Now, one point to note, and you mentioned this as well, this is the fourth meeting where not all committee members agreed on what to do here, and a number dissented, either wanting further rate cuts or wanting them to hold at the current level. Now, the difficulty here stems from the tension in the Federal Reserve's dual mandate. On one hand, it must keep inflation steady. At the moment, inflation is above the 2% target, but it's not rising at an alarming rate. The other concern, I think this is the primary concern for the Fed, is that job growth. It has a job to maintain job growth in the United States, and the data around this has been conflicting. Some measurements show a slowdown, and then we received data that was delayed from September showing the economy created around 119,000 jobs. Now, Jerome Powell said today that the Bureau of Labor Statistics is probably overstating that job growth right now, and that when those numbers are revised, it may show that job growth is falling, hence the need to cut rates to stimulate job growth. But the risk in cutting rates to help job growth is that it may push up inflation. Now, just finally, another critical piece, I think, from what Jerome Powell had to say today in this press conference was around Donald Trump's tariffs. He spoke clearly about the impact he believes tariffs are having on the economy. He said with inflation, which is currently around 3%, he said if you get away from tariffs, inflation is in the low twos, it's really tariffs. So we know the president is no fan of Jerome Powell, and possibly even less so now. He's talking about how much tariffs are contributing to inflation.
I noticed that too. I think we can expect to hear from the president on some of that. Mitch McCann, thank you so much.